This is Alan Bush with ADMIS. In the stock index futures, we are seeing higher prices today. Some of this strength linked to the Philadelphia Fed index that did come in quite a bit weaker than expected at 6.5. The guess was 15. Of course, this weaker economic statistic suggests that the Fed may need to hold off on their tapering of their quantitative easing program. Yesterday, there was some pressure in stock index futures after the minutes of the most recent Fed policy meeting showed that there could be a tapering in the coming months, as they said, if the economy shows improvement. Our feeling is that there will not be a tapering until well into next year. In fact, if there is a tapering, or I should say when there is a tapering, it should be beyond the consensus view of a Fed scale back that many analysts are expecting in March. So from here, I would expect higher prices for stock index futures as QE remains intact. Over in the currencies, some pressure in the euro currency yesterday. This on talk that the ECB could take rates into negative territory. Of course, this would hurt the euro currency from an interest rate differential point of view. However, today we are seeing some gains in the euro currency now as the president of the European Central Bank downplayed the possibility of negative interest rates in the Eurozone. Also, we had some better than expected manufacturing numbers in the euro area, helping the euro currency to gain in the overnight trade. Seeing the pound higher after some better economic statistics there. We are very close to 3-week highs, so the pound continues to be one of the better performers, and I think that trend will continue. Pressure in the Australian dollar. This after the Reserve Bank of Australia Governor Glenn Stevens hinting at the possibility of central bank intervention against the Australian dollar. Also, we did have some negative economic numbers out of China, also hurting the Australian dollar. Longer term, we still feel that the dollar index will weaken as interest rates here in the U.S. remain very low. And in the interest rate markets, pressure yesterday in treasuries, this after the minutes of the recent Fed policy meeting implied the possibility of an early taper, which we do not think will happen. But in any event, that pressured futures yesterday, some follow-through weakness today, but some recovery gains with the Philadelphia Fed index most recently coming in very weak. Also, there's a very good chance now that even though we are lower in treasuries today, that we will see futures trading higher on the day. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.